Welcome to TradeTheMBI.com. This is John's reports for the 5th of March, and just having a lot of fun despite the global calamity, the rising epidemic, states of emergencies all over the world being developed, and yet the market posts these miraculous rallies. And this is part of the disconnect that you're going to see. And in the short term, these minor effects work, but from a broader standpoint, they usually end up net result negative for the market in general. I think the last time you have these kinds of emergency cuts and things like that, what you'll get is in the first week or so, a couple of percentage point move in the market in the positive direction, only to fall back down under a broader short, because what it's a recognition of is that future problems are coming because you don't declare states of emergency when things are, super good. And I've been telling you the long-term effects of this are serious. I mean, we can see them developing here in Europe early. For instance, I have friends who own restaurants and that here in Florence and that, who have, typically, several hundred people, minimum a night coming through. And in the last couple of, week or so, you're down to one or two clients who happen to be just locals. Anyone who's been in the business for long enough realizes with the amount of overhead you have, labor costs, everything else, fixed costs, I don't care how much you've put aside. I mean, that's a burn rate faster than Tesla, and they don't have access to capital markets like Tesla and that. So there's going to be just this massive pain, and the EU is doing zero for helping its citizens in that. So what's going to happen as this starts trickling? You're already seeing Apple, mentioning that, hey, we are going to have a problem with our iPhone capacity and everything else. This is all going to trickle and lead to, of course, the global tourism. Airlines are going to be devastated. Again, another situation where their payments for planes and everything else are fixed. Even declaring force majeure on a lot of their contracts and stuff isn't going to help. This is, you're already seeing with global shipping. So, fine, the market rallied off of, the little positive news, but even with this kind of rally, 50% retracement, not uncommon. We're just now getting out of the negative 13.5, but you can see we're overbought with the, I don't even want to say overbought because that's really a misnomer, because what we're seeing is an extended move that's putting pressure on its ability to sustain itself. And that's what the extreme histogram points to us down here. As we start to see the yellow, if it were red, it would be even worse, particularly if you're seeing red below 50%. That's real ugly because that's just not going to survive. And it's not uncommon to have this kind of a drop, 50% retrace up, so effective ABC upside down. Same concept, and we already knew this because we had the dip below the red line, so we knew we were coming, and that's what these dotted lines are pointing to you. So, just to be aware. Now, it doesn't mean it's going to happen all at once or right away, though markets tend to fall 66% faster than they rise. We know this, which is why we love those short signals. Particularly, when they're producing, in this particular case, higher highs on our lower shakeout readings. It becomes really ugly. And we've even had questions about this. When we get to these peak points above the 15 and particularly above 25, and you can activate the 25 line on the shakeout that's in the inputs, and that's just a simple one. You just format the indicator and you go to the input section and you can see them. So, warning line, top outline right there, you make that a 1, that would show the plus 25. It just depends on what you want to see. Likewise with the Dealcon Paint 2, here I've removed, you don't notice you're not seeing, here you see the X's and the P's. You can remove those if it becomes an issue. That's just in the inputs by putting a 0 instead of a 1. If you want that clarity, but that's what the whole point of the color on the charts. And so from a NASDAQ standpoint, no, it's not surprising that we had this nice buy reaction, the green crossover. Those are all good things. Still strong there, but you got short-term buyers fading off. And what we're looking for, and what I would expect to see, is this spider effect right here, where you get the crossover and then the immediate return. Usually at that point you tend to get a DOC spread. Those become very effective for a nice dip. But now in this case, we knew that we had steel resetting, which was going to create a potential power buy from a short-term buyers, and then you're looking for longer-term buyers to catch into that, which they have. And we've got the rising red. The question will be now, as it starts to, we get a lower shakeout reading, it'll be a rollover effect, and then we would expect a return to the lows, or at least a good portion of them. We'll be really watching that 23% line on all the dailies, 50Ks in that, and of course we're always going to see it on the 5K first, it's no question. The flood to euros, crazy, but whatever. This is central bank involvement wanting to try and keep a parity. They've always considered the euro at 120 to be where things really should be, but the disparity between economic growth and that comparative to the dollar and stuff, this move is an extreme because you have so many people betting the opposite direction, and you reach that key threshold, and you just can't stop central governments. They just have unlimited resources to apply to it. So there's just nothing you can do to fight that, which is why I always say, when you get the signal, you go with it. That's the easiest way not to have a problem. You can be right, and the market go the exact opposite direction. So I'd rather just not worry about being right. You can understand the fundamentals, and that there's going to be divergences that take place within what should happen, because eventually what should happen does happen. It just not always when you think it, because what they do is they try to outmaneuver you psychologically and create a wave effect because you have people that are positioned and they're getting to what, that's where the terms max pain and that derive from. So from an oil standpoint, you're already seeing this airline jet fuel costs and that plummeting, and that's just going to continue. They can't fill their airplanes, so even cost-cutting measures just to try and draw anyone into their airplanes is going to be the next step. And then you know that's a capitulation that I think we're even had a friend. It's like for $420, $30, I can get round trip, to Italy and back. And it's like, yeah, that's kind of an indication that things are in a little bit of trouble. And of course, like I said, even with the momentary dip for gold, it's still going to return. This was more just a cleansing that has to happen when you get severe market disruption. People usually sell their commodities to cover their equity positions. It's a hedge situation going forward. So from the day, we ended up with the nice early power move that started early off with the nice buy signal. Beautiful color in the green and everything, and then we started to get into our softer period. We had reached the plus 15. This is an early one, so you know that this first one, when you're up here with the yellow, before it crosses below the magenta right there, is usually your trickle down effect. But with a full reset, what you're looking for then is that pushback up towards the highs. The secondary one, is going to have a little bit more of an oomph to it, particularly since we had dipped below the red line. So that was the target, and you can see, boom, dotted lines, comes across, fills it. There's the star that says it up. Yes, in fact, it did get filled. We like that. And then the day kind of traded sideways and soft, and then we started getting into talking about the scanner feature that's on TradeStation for stocks. And during that, we had one of our members, Steph, she was mentioning, hey, focusing back on the market, we had turned into this positive extreme on rising DOC red. And it's always good when members can do that, because look at what that produced. That was a phenomenal run of just beautiful green, cyan below red, which is always a buy. Even with the little interruptions and the crossovers. Again, when you do have that cyan and always a buy configuration, you always look for that steel going above and then back below cyan is potential for modest weakness, which is usually ends up being an opportunity to add into a position. But here you go. This is the plus 25 on the shakeout. That's where we're getting into a massive extreme. It's not going to be sustainable in that you get a leveling off, but shakeout stays positive. So without that dip below into the negative territory, this remained in a bullish configuration. It was just a matter of just waiting for your next histogram increase, and you can continue to ride with that. But then finally, we reached peak levels. And so what we start to look for after those peak levels is making the higher highs on a lower histogram. Even though you're still above plus 15 on the yellow and magenta, I'm still not afraid to take those setups from a short side, or at least collect profits towards the peak. I usually look for a range between the 76 and 100% Morganacci Let's slide over and see how that signal for the secondary short on the lower histogram went. Well, that started a move. Now, what are we looking at? Oh, okay, positive extreme. Oh, gee, where have we seen this number before? 3063, and then you have a series of other ones going through there. And lo and behold, what a shock. Isn't that amazing how well that works? Not really, but it's kind of fun to say it that way. But just a beautiful print. Just filled the positive extreme, and this is a representation of what those algorithms can do. They drive it to a point where they can force enough short covering that they can begin to liquidate into that short covering and create a new short position from a higher level, right at, well, just shy of this other 3132 algo. It was really closer on point to the 3117, and they drive it all the way back to fill in those setups, and you will get a series of short covers here. It'll be a little tougher because of the pre-market, but what they're going to get at the open will be a flood of sells for all those people who bought into that upside rally or were forced to, and they get whipsawed, and that's the beauty of it. Works every time, and you can see here we have no reset, so this isn't going to change, at least in the near term for now. We'll see how we get closer to market time, whether there's going to be any desire to short cover. I don't know that there's going to be all that much impetus to do so, but it's going to be interesting, and this is the kind of volatility that we love. I mean, despite all of the calamity, it's nice to be able to report good news and that we're right on top of the good news, so no objection to that whatsoever, and fun putting it out there. Certainly happy to answer questions in the Skype chats about these kinds of configurations, because pointing out these divergences is critical, both on the top side and on the bottom, because we also look for that, in a rising red DOC as well as in shakeout, where we're moving above that to be able to capture more effectively the bottoms that don't allow you to worry about the resets that typically take place within some of these configurations. So all in all, very exciting stuff. We'll keep at it. Trade well. We'll talk again later.